Now we're going to do the AVID Investors Market Update. This month, there's so much to talk about because the market has been literally shifting beneath our feet. It's been very volatile and variable. And what we're seeing is, as you've just heard with these examples, more off-market sales are being considered. Offers that are being considered by sellers may have contingencies. That wasn't something that was flying when homes were flying off the shelf so quickly that sellers had their choice of 100 buyers for each home, if you allow in a little exaggeration. We're not expecting buyers to release all their contingencies and give up everything they may have contractually in a contract that lets them go through their process in a way that lets them back out if they need to. So we are seeing more deals fall as buyers readjust their process and agents readjust their coaching and their advisory roles. And instead of saying, okay, we really need to think fast and use our inspection time to finish thinking, we can say, let's think about this. It's got 20 days on market. I don't expect it to fly off the shelf. Why don't you sleep on it overnight? It is a big decision. So we're seeing the market is just acting differently, and buyers and sellers are having to act differently in response. And this inventory is growing. So the laws of supply and demand have certainly been in effect.
Have you seen the sellers adopt that pretty much as reality set in on most of them, or is it still la la land where it's going to be perfect?
Yeah, have the sellers adjusted? Have they adjusted their expectations? What we think is it depends how long they've been preparing to sell. If they've been preparing to sell for a few months and they were told they were getting this, they still want this. And so they're chasing the market down a little bit. Now sellers who are coming online, we can coach them a little bit and set expectations. But there is that that change, that sea change where people aren't necessarily settled into what's happening. And there is a little bit of heightened expectations. So for example, we just had a third counter on an offer I've been helping a buyer with. And we had to go through 3 counters, and counter 1 was, okay, we'll take your price, but we want you to make earnest money non-refundable at the end of inspection and release it to the seller. And my buyer's like, no, I don't want to do that. I'm not doing that. Go pound sand. And the seller said, okay, fine. But in that case, we want this closing date. So there's a little bit of give and take, but it's just not all take from sellers. So there's some adjustments expected. Good question, Alan. And we'll go into a little bit more of that, but also obviously interest is really affecting the story, and the level of interest in the laws of supply and demand and affordability, I should say, is what interest is affecting the most. So we've spoken with a few lenders and we've been keeping in touch with them to see what are some of the options, and this is going to be affecting how it makes our numbers work, what a homeowner who moves in is going to be able to afford, or an investor. So Tyler Porter at OneTrust has a really interesting product for investors who have high assets that are semi-liquid, and he really uses liquid loosely. So they'll include retirement funds in there, or a 401k IRA, that sort of thing. And so they are, oh wait, no, I'm sorry, that's KeyBank. KeyBank has one with the 1 million, the high asset loan. And that's the one at the bottom of the slide. I think it's the one I'm most excited about. So sorry to jump right into that one, but let's do it. If you've got a bunch of money in the bank somewhere that you can show, their rates are a good percentage point lower than what you can find anywhere else. And that's really nice. So if it's owner occupied, it's 4.875, and non-owner occupied, it's 5.125. Tyler Porter at OneTrust, his rates are 6.1 to 6.3. So that you can see the difference there. And that's their investor and second home rates. And then we also expanded out of the box a little and looked at Summit funding. We still do a ton with Idaho Central and as well, but Summit funding has a HELOC with a 3-year fixed rate of 5.123. So basically investor loans, you're really finding them in the upper 5s or around 6. And so we've been looking around out there to see what other products are available that can help make things a little more compelling. And we're trying to keep our ear to the ground just so that we can serve as a resource to you when you have this question. Hal,
Do you find this market softening with regard to the duplexes, triplexes, fourplexes, the same as with the homes?
I'm still on the fence with that a little bit. I haven't seen cap rates going up or down yet, but we also, I think that market, I need a minute to answer that. And so I think that agents are starting to price things a little bit more realistically, and that will trickle into the duplexes and fourplexes. Also, rents are still high. However, it's not quite as heated. And so that is really going to drive those duplex and fourplex prices a little bit. And I have seen some down arrows in the pricing where they've had the price drops. So I'm going to predict that my answer to that will be yes, but that it's that I'm still kind of watching it happen.
Yeah, thank you.
And this was a slide from last month, but I put the wrong link up. I made a short link. If you want to see your property tax estimate, I made a bit.ly link. That's a short link, so it's case sensitive. And it's http://bit.ly/2022 taxes in Idaho. And if you go to that site, you can see what the estimated value for your taxes are. This is what the title companies are now using when you're closing on your closing statement. They're using these taxes. And so if it proves to be different in the future, when it comes out, you might adjust your closing statement or just call it a wash. But some people will look and say, hey, it was different than what we expected once the actuals come out. But these will give us our rates on what they expect your taxes to be, since so far all you have are those assessed value notices giving your assessed value, but we don't yet know how it translates into taxes, but we actually do. Go to that link and you'll find out, and you'll see a screen just like this, which is the estimated property tax screen, and you can plug in an address. Now, Hal, here to answer your question a little further, here's some of the indicators that we watch for the duplex and fourplex market trends. We watch inventory and pendings, and inventory just dropped a little bit, but we've seen the price decreases starting to happen. Pendings has been constant, sales are way down, and absorption levels are over 1 month. Over 1 month is still a seller's market. So these are all indicators and corrections, and once they've had a few months to keep repeating themselves, if they do so, then we'll give you a hard yeah. The duplex and fourplex market is definitely following suit of the single family home market. But to give you an example, now this slide confuses me because the new side is on the left and the old is to the right. But this is showing what sales have been doing in Ada County is blue and Canyon County is green. So we still have sales up on an overall scale. And again, here, the same thing in Canyon County. Oh, wait, I'm sorry. Duplexes in blue, fourplexes in green, and this is all Ada County. And so you can see that we still do have greater duplex sales, and fourplexes just haven't been so prevalent in the past few months. Sales haven't been huge. Canyon County, again, the duplexes are your tall line, showing more, and the fourplexes are your low line. And on the left side of the slide is newer. Is like March or April of this year. But here's our GRM trend. So these are our numbers. We only had one Ada County fourplex sale last month, so it's really not enough data to base on. So you'll want to look at that red line. Now in this, it's the normal way we do it, where newer in time is on the right side of the slide and older in time is on the back. So this is January 2019 and this is May 2022, but we only had one sale to speak of there. So in any event, our gross rent multiplier is showing signs that things are stable. Returns are not going crazy. They're not moving around a lot. And I won't go into these too much because of the lack of data last month. But I will show you what's going on with active fourplexes right now, since we actually have some data there. I think that we should all put about a dime together and buy this one here cash because it's $1. They're doing a call for offers on that one. We've seen that. We've done that on a recent trailer park that we listed, where you do a call for offers. You don't price it. You see what the market wants to pay you. And that's what they're doing on a north end property on 14th Street. I know we have an AVID investor, and I don't know if he's watching, but who owns a fourplex on Douglas, so that would be relevant to him. And one of these, oh, and I wanted to point out that you've got those red down arrows in price over there, so that shows that those guys have made some price adjustments. For the longest time, after we had the response to the pandemic and everything, all we saw were up arrows. So we are getting to see more downward arrows. This is your 5+ market. And this Jefferson property is interesting because it's 7 units for 1.1 million. So that's a lower cost per unit than we've seen in a bit. They're small units and it's an older building, but I just see, you know, I haven't toured the property or anything, but maybe there's some value add potential in that price. That stood out to me. You know, more than say like the 8 units for 4.2 million that's not in the north end. So I like that one. So this is what the Boise Regional Realtors have put out, talking about how market cooling, the cooling demand has affected overall sales. And so as with typical, the older January 05, April 2022, these bars are your median prices. So you've seen how these median prices have gone up over time. The blue line is the percentage change year over year. So that's showing the appreciation or depreciation that we've experienced each year since 05. And as soon as I look at these, I have to go, okay, well, let's see, this must be, and it was October 09, and this year was January 2011, when we had a big recession and we really had depreciating markets in effect. And so you can see how, let's see, this is January 2021, April 2021. You can see how we really had things pushing to extreme levels. And so what we're seeing now is not necessarily an extreme level when you consider that this black line is your baseline. That's the average change in value over many, many years. So that's what would be considered, you know, well, I guess baseline. So what's happening? Well, the pandemic fueled price and demand growth. And then we had low interest rates and extra buyers. And so we had an imbalanced market. And that happened as soon as really there was like a pause when the pandemic hit, and then bam, it's just like the floodgates to Idaho opened up, everything went crazy. Now, and our market was already inventory taxed. We were not heavy in inventory. And so that really, really shifted the laws of supply and demand. So then the buyer pool now has started to decrease, largely due to higher rates. That's what they're supposed to do, slow things down. And so inventory has caught up a little bit, and it's giving buyers more options, and that's going to affect the laws of supply and demand. And so, for example, at the end of June, we had a 193% increase in supply year over year from last June. Almost, you know, and then also, it was the highest increase we've had since September 2016. So how this affects you as people who play in the real estate market, buying and selling and investing, or as homeowners, we've started seeing buyers paying a little bit less than asking. 98.5% of asking is the average number there, compared to 104% of asking last year. So they're paying less below than they were paying above last time. So things are kind of normalizing a unique market. At least that's what we're hearing. That's what the analysis from all of the local realtor association and how they're analyzing it. And so seller expectations require adjustments, which is right where you went with your questions, Alan.
I should be quiet.
No, you shouldn't. It's validating, it's what needs to happen and what isn't happening in every case. And so this makes appropriate pricing more important than ever. Once your home sits, homes don't age like wine. They age like bread. And so as your home spends more time on the market, it's getting less and less attention. And so you want to price it appropriately and never worry if a home sells too fast and think, well, that means I could have gotten more. It doesn't necessarily mean that. And so here's what we have. The median sales price is at $592. And last month I had to say, oh my goodness, it's above 600,000. And the month before that, it was at 595. So we've had a decrease in the median price of homes. We've noticed builders not being as aggressive with their pricing, and there's a lot of new build homes still in the market. And we've also seen that inventory has gone up a lot from last month, as well as from last year. Now, this is Ada County. Similar story in Camden County, where the median price of homes this past month was down from the month prior, but it's still up year over year. So if somebody bought a house, I haven't had to, I've still gotten to celebrate and say, hey, look at this property that's comparable to the one that you bought and show them what's happening. And it's still a positive number. Inventory in Canyon also up from last month, and days on market has been very similar. So that's the market update that we have. I'm not going to go into rental market update too much because we're going to really focus on that next time. But I did have a little update from Kat here at First Rate Property Management. They're always kind enough to throw me some snippets on what's happening. Does anyone have any vacancies right now in any rentals? Sam, Jerry. Okay, yeah. So what we're seeing, and I think I know you know this, Jerry, is we're seeing that they're throwing a few move-in specials out there. So instead of saying, hey, we're going to take the rent down to this price, it's let's give them a couple months at a reduced rate, but lock in a good rental price. And that's going to help lock in your future renewals. That baseline will be established. So you're giving it up on the front end, but not on the long term. There is inventory. First Rate has inventory to fill. They do all the renewals at this time of the year. It's a good time for filling rentals, but people aren't moving in droves. It's just taking a little bit more time. So this 1 week vacancy might not be the thing anymore. And then pricing, the increase in rents. So we've got a 4-bedroom, say, that's a brand new, really nice townhouse that's going to rent for around $2,800. Maybe there'll be a move-in special for a couple months. We're anticipating that there's a likelihood that will be a roommate situation because people are paying $3,000 a month for a 4-bedroom. That might not all be one family living there. It could be a roommate situation. And that's something we're going to start seeing more and more as rents force people either into smaller spaces or into more people contributing to that rent. Bobby.
It's also a way to get more rent off of that unit, because I rent several of them when I room by room, and I get far more than if I rented it just to one family.
That's a great point. And I don't know how that sound came through on Zoom, but what Bobby was saying is that roommate situation isn't something to be feared, because I'm going to add a little, sure, maybe it's a little more wear and tear on your home. However, that's going to be far surpassed in the additional rent that you'll receive. And she's gone so far as to actually rent individual units room by room. And that's another way to eke some more money out of a rental, another creative solution, just like short-term renting, where you can get even more rent out of a unit, which we have been having to try to do because the acquisition prices were so high. So that's a great contribution. Thank you, Bobby.